This segment is sponsored by New Perspective Financial Solutions. When you hit a certain age, the government requires you to make annual withdrawals from all tax-deferred retirement accounts. These required minimum distributions, or RMDs, play an important role in retirement. And yet a lot of pre-retirees are unclear about how they should factor into their planning. So here to clear things up for us a little bit is Lisa Kim. Lisa is a financial advisor and managing partner at New Perspective Financial Solutions, a DC-based firm that focuses on preparing people for retirement. Welcome back to Great Day.
Thank you for having me.
I know people are out there, they're getting ready for retirement, so maybe they're approaching it or they are in retirement. What should they know about those RMDs, or the required minimum distributions?
Yes, I was just going to say the government loves their acronyms.
Yes.
So RMD, required minimum distribution. So what does that mean? It means if you have any tax-deferred accounts and you reach age 73, age 75 in 2033, you're going to be forced to take distribution out of those accounts. So what does that mean?
Yeah, what does it?
It means they're going to take your age and they're going to take how much money you have, and they're going to tell you what you need to take out. And it's because the IRS feels they've waited long enough for their tax money, and they want that now, and they're going to force that distribution on you.
Okay, all right, so that's what it is. In the big picture, how can those RMDs impact your retirement portfolios?
So the first and foremost is you're going to have to liquidate holdings, right? So this could get in the way of your overall long-term financial strategy, but also it's going to count as income. So when you take this distribution, it could potentially bump your income bracket up, which means you're going to pay more in taxes. So we want to make sure that we're not increasing your income, right? We're not bumping you up to another bracket, but also your income can impact your Medicare premiums. It can impact the taxation of your Social Security.
Okay, I'm glad you brought up taxes. I feel like that's always top of mind. What are the tax implications that we should be aware of? What could RMDs really mean for your tax bracket?
Okay, so it can bump you to another bracket.
Okay.
So let's say you're in the 12% bracket and you take RMD, and it forces you to go to the next bracket. So now you're paying what we would call unnecessary taxation on funds because we didn't plan for it. So you want to plan for the RMDs, right? But again, it can bump up the taxation on your Social Security, it can increase your Medicare premiums, and so we really don't want to pay unnecessary taxes if we can avoid it.
Right, okay, good to know that. Then also when it comes to RMDs, trying to be proactive. What are some of the steps that people could be taking right now to put them in the best possible position down the road so they're not dealing with some of the problems that you've talked about today?
Okay, so if you are in an income bracket, and you are, right, everybody is, we want to see what the cushion is before you go to the next bracket. That's what we call the sweet spot for Roth conversions. And a lot of people have talked about Roth conversions, and what that means is we take tax-deferred money and we purposely change it to after-tax money through a Roth conversion. So we want to make sure if you have room in your bracket, we can do that for you before RMD comes. We can also do what's called a drip of the tax-deferred money. We can do it through an annuity where you get a guaranteed income stream, or we can just do it through plain distribution. So we can do it in the years that you are retired leading up to RMD, so we're decreasing that balance. So when RMD age comes, you're not stuck with such a big amount you have to take, thus bumping your bracket up, taxation on Social Security, and additional, Medicare premiums. So there's things we can do. We can be proactive in getting that money out of the tax-deferred account.
Start today.
Yes.
Thank you for making it understandable.
Thank
you.
you.
So we can understand the acronyms that they throw at us. For you at home, if you'd like to learn more and you want to make sure that you are on the right track for retirement, New Perspective Financial Solutions has an offer for you. Lisa wants to help preserve and continue to grow your money while also helping you create a reliable income stream. So right now, for the first 5 callers and anyone else with a portfolio of $250,000 or more, she's offering a complimentary retirement income plan. This allows Lisa's team to sit down with you personally or schedule a call to make sure that you are on the right track for retirement. The number to call is 240-335-8366. Again, it's 240-335-8366.